Still with me for today's discussion is Bismarck Rewane, CEO of Financial Derivatives and member of the Presidential Economic Advisory Council, and Abdulrahman Yinusa, former council member of the Chartered Institute of Bankers, Nigeria. Bismarck, well, more than we expected. Well, you voted for, you said voted for a hold, but then we saw 100 basis points. And the CBN governor described that 100 basis point as a moderate increase.
Yeah, okay, let's break it down. I think it was quite candid. And it described the situation. Yes, it is true. One data point is not a trend. And therefore, let's forget about the political considerations and go straight to the economic considerations. One. Two, he did say the signaling rate, which is the monetary policy rate, has gone up by 100 basis points to 17.5. Great. But what are the real rates in the market? The treasury bill rates for 1 year is down to sub 8%. The treasury bill rate for 90 days is at 2%. So yes, inflation is at 21%. If that is the case, inflation is at 21.4%, then don't just move only the policy rate, move the market rates, because that was what caused that distortion earlier on in the year. Secondly, that he did mention that the currency change would add to the tightening. Great. But generally speaking, the question is that the signal rate is running in conflict with the market rates, except you couldn't move that very quickly. Also, he did not accept the reality that there's a limit to what monetary policy instruments can be used to deal with fiscal problems. All right? Therefore, we must address all of this in conjunction. Third point is that the DMO is trying to securitize debt at 9% per annum, 3-year moratorium for 40 years. How does that fit in to the tightening posture? And how consistent is that with this particular stance? So signaling policy, tightening, de jure, de facto policy for borrowing by the government, loosening, and inflation standing on its own.
Standing on it. And so thank you so much for that. Let's take a reaction from Abdulrahman. Well, you voted for a hike as high as a 50 basis point hike, but we've seen 100 basis points. Let's get your reaction.
Yes. Market, the banking institution generally will be disappointed with the magnitude of the increase. There is nothing to suggest that a 1% is required at this point. If you have been increasing, even the last increase was 1%. That was way back in November. And if you claim that those increases are beginning to yield positive results, then why are you going on with another full 1%? You should do the deceleration of your increases as the results are also beginning to show. And irrespective of what you may want to say about inflation still being up, you're not going to achieve that overnight. And clearly, if you say it's already hurting growth and therefore it makes no difference, that is not correct. If it's hurting growth and you increase it further, you're only going to increase the hurt. I don't know where you will say that a degree of hurt by taking it further up is still the same. I don't buy that. So for me, I think there is a disconnect a bit between the thoughts of the central bank and members of the MPs and what market expectation is. Market expectation, if they care to know, is hold or at best a very, very marginal increase.
Right. Thank you for those thoughts. Well, you wanted to say something?
Yes, but if you look at it from the exchange rate perspective,
okay,
an increase of 100 basis points. So cumulatively, I think we're done about 600 basis points. Yeah. And inflation has declined by about 13 basis points. The US has done about, if they do another 50 basis points, would have done 450 basis points, right? The inflation has declined by about almost 3.5%. So the interest rate inflation differential actually what Nigeria has done essentially is to ensure that it doesn't worsen. So arithmetically, right, it does mean that we should see if the policy rate actually reflects the market sentiment, we should see an appreciation in the naira. But if the policy rate is disconnected from the market rates, as I explained earlier, in terms of the treasury rates, you will actually see a further depreciation of the currency. So what needs to be done immediately is for the debt management office and the fiscal, of course, the monetary policy people to ensure that the policy rate sentiment and the market rate actuals, right, are synchronized to ensure that everybody, so that the marginal propensity to save, which is the driver of this thing, will increase, and the marginal propensity to consume will decline. Any other thing is basically theoretical at this point.
Let me take one more question before I move to Mr. Abdulrahman. The governor did say that the economy will continue on a positive trajectory this year growth, but at a subdued pace. He said that CBN's projection is 2.88% growth for this year. I mean, he mentioned some of the shocks, headwinds, high cost of energy, election spending, high cost of debt servicing, etc. 2.88%, that's quite low.
Yeah, I think that's lowballing. The truth is that all the projections I've seen are slightly higher than that, right? So managing expectations could be that. But I think that to the extent that there'll be a change in leadership, to the extent that there will be a change in direction, and even the same policies more aggressively implemented means the economy is likely to show a more impactful growth. The central bank is being extremely cautious and modest, which is their usual posture, and therefore one cannot fault that. What one can say is that I think that whether we like it or not, things are going to be much better than what they are now because, of course, subsidies are going to be phasing out.
Well, fingers crossed on that one.
Yeah, cost effective. Most of the reforms I've been talking about will start seeing some light of day.
Right. Abdulrahman, we have about 4 minutes left. Now, once again, the central bank governor did not talk about foreign exchange. He didn't mention the naira or the dollar, just like the last meeting. But he did talk about, express his concern about the state of the external reserves as at last year's, at December, 36.5 billion and slow accretion to the reserves. Where does that leave in terms of the market signaling foreign investors surrounding the naira, the foreign exchange, how we run our foreign exchange market? We still have multiple markets, the NAFEX, INE, and of course the parallel market, which most businesses use as benchmark. Where do we go from here?
Yes, I think the parity or the difference in the exchange rate, both formal market and informal market, is already too wide for any reasonable conversation as to what actually is going on here. And the central bank not discussing it at all also goes a long way to show that either they have no idea what to do or they are already aware that there is nothing that they can do to bridge that gap if they are not going to depreciate the official currency. So I think for me, that is a challenge. And if you ask, what does it portend to the market? The market is already suffering. In case you are not aware, the central bank runs a lot of forward markets, forward business, and they've been technically defaulting. There are delays in meeting the obligations that they have put forward. Some of them up to 3, 4, 5. Sometimes we have to 6 months in terms of fulfilling commitments that were already agreed, and paid for, or contracted and signed off. In any forward market, what you expect is that on delivery date, you move the funds. Here we are hearing delays into weeks, into months, 1, 2, 3, 4, 5, 6 months. So for me, I think the market is already pricing all of that in. That is why we are talking 450 thereabout in the official market, and we are talking 750 and above in the alternative market. So clearly, the central bank has to come to table and discuss this and find a way to deal with it. I'm not of the school of thought that by playing the ostrich, pretending that those problem does not exist, the problem will go away. No, it is here. we better sit up and deal with it. We've had a central bank, we've had errors in the past where the difference in the official rate and the alternative market rate is less than 5%. And here we are talking, sometimes up to 80, 90%. So clearly it can be done, for somebody else to sit up and decide whether the parity is worth working on, or we continue to wink in the dark.
Right. We have about 2 minutes left. Just one more quick question for you. Just the overall state of the economy, the CBN saying that, of course, we should expect subdued growth this year. But he did, spend quite a good amount of time talking about all the interventions of the central bank, all the money spent, all the billions of naira spent across, different interventions across different sectors. Does that give a sense that, look, he knows that many of these have not come from the fiscal authorities and has just decided to take on that burden? That's the monetary authorities now taking on that burden.
Well, my take is that no matter the intervention of the central bank, they cannot replace the fiscal institutions. And the earlier we prop up the fiscal institutions and challenge them, will also be up and doing with their responsibilities, the better. The central bank can continue to throw money at these issues. It will not solve the problem.
Abdulrahman, we're going to have to leave it there. No, thank you so much for talking to us today. Appreciate your time on our special broadcast today. And of course, Bismarck, we're out of time, but thank you so much. As always, pleasure to have you join us for our MPC broadcast.